What happened was Ameriprise, who was a big financial advisory company in the market, consolidated into another location, and they said, you know what? We don't need this building anymore. They gave it back to the bank. The lender is now sitting with a building that's costed them money. They're not only getting their interest on their investment, now the building's costing them money and they need it off the books. So what do? They dump it and write off the losses. So now here we are. We're sitting with a 900,000 square foot center that is now empty. So what happens? The value goes down to the ground, and now somebody else has to come in and either look at the long term that the market's gonna come back in the office space, or maybe they're gonna have a plan to repurpose it. Another reason why we're gonna see a crash in all sectors of real estate, even the good performing ones, is because their loans are coming due. Commercial real estate typically does not go out as far as residential loans. When I borrow money, I borrow on a 3-year, a 5-year, or a 10-year. That's how I borrow. And in 10 years, that money is due. And whatever the interest rate is, the day that that money is due, that's the new rate I will be paying. And in this case, it's double what it was 5 years ago. Can the property maintain the higher interest rate? In many cases, no. Well, if the property can't make enough money to pay the mortgage, the taxes, the insurance, and all the bills it has, or if it gets to the point where it has zero NOI, why is anybody going to buy a property they can't make any money on? That doesn't make sense either. And they're going to give the keys back to the bank. Now the bank's sitting on a piece of property they don't want, and their loan is out the window. So what happens? The bank wants it gone quick. So what do? They have to discount it. Get as much money as they can, write off the loss they took, and move on. Hopefully the bank won't have too many of those loans. But if they do, a bank is only worth the value of its loans. If a bank has bad loans, it's a bad bank. And you know what happens to bad banks? It happened in 2008. Why? Because the loans were bad. Now they're bad for another reason. They're bad because the rates went up. There's already hundreds of billions of dollars in loans that are out there that they're keeping quiet. Shh. It's called pray and delay. They're praying that the interest rates will go down and the properties will generate more income.